traders, my name is Horat and welcome to the market update. In today's video we will take a look on the euro dollar, cable, Aussie dollar and gold. On the euro dollar weekly chart we are looking lower since we identified end of a free wave rally from 2012 lows, which is a corrective structure, ended at 137.10. The reason why we labeled end of this wave E pullback here is of course because of impulsive decline through this lower support line of this corrective channel, which puts wave C in place. So ideally we will see a larger 5 waves of decline in wave C, because we think that this pullback was a final leg of a running triangle placed in wave B. Okay, so on a daily chart we turned bearish because we identified this fall as a 5-wave movement. Also notice that this recovery from latest swing low was clearly made only in 3 waves, and as you know we turned bearish last week, and now this bearish price action appears to be confirmed because the market fell well below this trading channel, which we know it's a corrective channel. So always when you see a 3-wave movement within 2 parallel trend lines and then a break through this lower support line of this trading channel is your confirmation for a continuation of a downtrend in our case. So we are looking lower here, and we actually called a top of this euro dollar right here last week after 5 waves up on dollar index, if we recall, and as you can see the market is trading nicely lower since then. This was a nice but deep 3-wave retracement in wave 2, and when the market fell lower last week and closed below this trend line and left only 3 waves behind, then at that time this was your confirmation that this market is trading lower. Okay, now we can also see that the market fell well below this lower support line of this trading channel. So this was not a corrective channel because the price action went out of this trading channel in the direction of this current trend, and this usually occurs in the middle of a larger black wave 3. Okay, so it means that volume and momentum, or bearish momentum, are increasing, which is very typical for wave 3 of 3. So I think this was a wave 2 pullback, and that we are now in a wave 3 of 3 headed towards 261.8% extension of this wave 2, which is our target for this wave 3. But on a larger perspective, I think that we will see much deeper levels, and watching this 261.8% extension of this wave 1 measured from a wave 2 high. Okay, so these are levels that I think we could reach in the next few days. On this daily chart, if you recall, I was also looking for this head and shoulders pattern. This was a left shoulder when we had a very small first leg, then pullback and extended leg. Then this was a head, and then we were tracking extended leg, pullback, and expecting smaller leg, which played out very nicely, and also this right shoulder reversed from a very similar zone compared to the left shoulder. So I think we are headed lower. This is our neckline, and if we will be able to take this break neckline out, then of course this will be just another confirmation this market is headed lower. So that's for the euro dollar. Let's take a look on cable. On cable weekly chart, we are also looking down since the market fell below this red trend line. Okay, which means that this wave B triangle is probably finished here. In fact, this decline is very sharp, clearly in impulsive fashion, and this pullback was very slow and choppy, which we know is an evidence of a corrective movement. We can also see that this pullback has been made in 7 legs. Okay, this was a 3-wave movement, first zigzag, this was wave X, and this was then a second zigzag. And more importantly, notice that this move has been made within 2 parallel trend lines. So once again, this is called a corrective channel because prices stayed above within this trading channel. But now when we can see a clear breakout for this lower side of this trading channel, then this is our confirmation that this market should continue lower and that wave 2 is probably finished. So here is also our 4-hour wave count, where we can see just sharp moves to the downside. So actually I will not try to go into the details here, but I'm just looking lower. But if we'll see any bounce here, then of course this bounce should prove corrective and will probably stop around this swing level at 1.54. okay. Now let's take a look also on Aussie dollar. On Aussie dollar we have seen a very strong bearish moves in the last few weeks, and actually my primary wave count was this wave count, where we were looking deeper in wave E, final leg of this fourth wave triangle. We are now testing this support line, but you can see that this moves to the downside is very strong, actually the strongest compared to these previous sell-offs in the last year or so. So actually I would not be surprised if we'll see breakout through this trend line. Okay, so I'm also observing this wave count, which is our second wave count, that suggests we completed a wave B triangle, that we will see a 5-wave rally, 5-wave fall in wave C beneath this wave A swing low. Okay, so of course for now I want to stay with the trend. I will not call a bottom until we see a bottom. Okay, so I will go with this wave count only if we see a bounce. If we don't see a bounce, then of course you want to stay with the trend. So for now I will focus on this current decline, and on this decline on the 4-hour chart is looking pretty impulsive. This was a wave 2 if you recall. In fact, just a second, last week we were looking for a break lower, if you recall, and then waited and mentioned this wave 2 pullback back towards the previous support. And as you know, when the support is broken decisively, then pullback will in many cases reverse from this support, because this support will then become a resistance, which happened nicely in this red wave 2, and then we have seen a very strong fall in wave 3 of 3 actually. Okay, so I want to stay with Aussie dollar weakness because I don't see any evidences of a low in place, so I definitely will look for even lower levels here. But in the near term we could see a bounce into wave 4, corrective wave 4. Why? Because I can count 5 subwaves in this blue wave 3 from this swing high, and we know that after every 5 waves correction, at least correction will follow. So I expect a 3-wave bounce. Ideally this wave 4 will stop out at the wave 4 of one smaller degree, which comes in exactly around parity, which is very important psychological level for this pair. At the same time we also can see here this base channel. We have seen a breakout here for this base channel, so of course in a wave 4 pullback I want to see that this base channel will react as a resistance. Okay, and this once again comes in around parity. Okay, so I will pay close attention to this lower support line of this base channel, which will turn into resistance, and middle and midline of this base channel. Okay, so for now we of course remain bearish on the Aussie dollar, but would love to see a 3-wave bounce from current levels, or maybe a little bit, let's say from 50 pips lower, where we can see also a very nice support zone for 5th wave here of this 5-wave decline, where wave 5 equals to wave 1. Okay, and you can also see 61.8% projection, which is actually compared to this wave 3. So I took this distance and then put 61.8% of wave 3 and put it on the top of wave 4, and I can see very similar level to this equality level of wave 1 to wave 5. So this, I think, it's very important zone from where we could see a 3-wave bounce in wave 4. Okay, and once we will have a free wave bounce, we of course could be looking for new short opportunities while the market will be trading below this critical invalidation level. So actually that's invalidation level when wave 4 will be gone and not this one. Okay, and now let's take a look on gold. Gold has been very unclear lately, but let's take a look first on the weekly chart. Here we are looking for more weakness. We are tracking this free wave decline. Okay, this is still a free wave decline. This was just a contracting triangle in wave B. So now we are trading impulsively lower in wave C, and we know that impulses are 5-wave patterns, so we need 5 waves down. Here was our wave 1, wave 2 pullback, extended wave 3, deep wave 4 pullback, and now we are looking for a sell-off into wave 5 of C, back towards this 130 level, and possibly we will test a lower support line of this corrective channel. So actually you can see that I connect these parallel trend lines from this top to end of wave B, and not this swing high to end of wave B, and then put a parallel line on this bottom of wave A. So actually I would not be surprised if we will see a test of this lower support line of this corrective channel in wave 4. So anyhow, for now bias are to the downside. Here's our daily chart. Notice that we have seen a base channel breakout here, which was confirmation for our wave, for our impulsive sell-off. Then we have seen a very strong pullback back towards this base channel, which reacted as a resistance here. We also tested this mid trend line of this base channel, but now we are already below or away from this trend line, so I think we are headed lower. On the 4-hour chart, notice that this pullback was very choppy and overlapping, which is important evidence for a corrective movement. And of course I'm looking lower now, since market also moved beneath this trend line, which I believe represents lower support line of this base channel. So actually I'm looking to the downside. Of course I want to see, because we are still in the mid of the US trading session, I of course want to see a daily close somewhere around current levels, or maybe even lower, to make even more sure that we are in a wave 3 of 3. But in any case, I will be looking for lower gold as long the market is trading below this swing high, because if this is wave 2, then we know that any sub wave in wave 3, which is in progress, must not retrace more than 100% of this move. Okay, so I am bearish. Okay traders, this is it, and I will catch you on the intraday updates page. Have a good day.